One of our mottos at Assad Wealth Management is we want to bridge the gap between Deen plus Dunya. That is our slogan. We want to make sure that you're successful in this world and hereafter. It is very, very important that you grow wealth, you be wealthy, your family's taken care of. There's a comprehensive financial plan in place, but we do not want wealthy, your family's taken care of. There's a comprehensive financial plan in place, but we do not want you to compromise your principles. That is the motivation for what we do every day.
Sharia-compliant investing is important for Muslim community because of the lack of options available on the market for Muslims to begin with. When they earn their money, there's inflation, times are changing, your money which is today is not worth much after a couple of years, and so on and so forth. So there's a natural depreciation of your money.
So we want to make sure that the average Muslim gets the exact same level of experience as the average Canadian on the street. But the difference is that we want to make sure that your money is invested in accordance to your faith.
I loved his process because he meets up with you, he understands your questions, he understands your financial position for your family, for your future financial goals, what you're trying to achieve. And then he comes up with a plan, and then we discuss those plans in a couple of meetings, and then we were able to set up and do the investments.
Whenever I have a need, I give him a call or send an email. There's a quick response back from him. He's always on top of my finances, and we go through our financial management plan twice in a year basis as well. And he gives me honest advice. Something is good and something which has risk, and it's not about just pushing or selling a product. It's all about what is comfortable for me.
His relationship with the scholars is continuous, and he continues to do the seminars and webinars to educate people around concepts like zakat, like how do they impact, how they can do the halal home financing and mortgages. So this is very important that he is himself invested in the learning, and he is distributing that learning, and it's built into his process.
My message to the community is that do not be scared of investing. Investing is actually quite simple. Educate yourself on the basics, inshallah ta'ala. Allow yourself to learn and allow yourself to have your money work for you. Once we have money, once we have wealth, it gives us the flexibility and freedom that we seek, and allows the capacity to give more, allows the capacity to take care of our families and, the cause that we believe in. As-salamu Alaykum wa rahmatullahi wa barakatuhu, everyone. I hope you can hear me. We are having some technical difficulties right at the beginning here, but inshallah ta'ala we can work through this. It's 2025. We're super excited to have you here with us with a new year, with a very exciting lineup of webinars planned for you. And we couldn't be more excited to have Mr. Ibrahim Khan himself from Islamic Finance Guru here with us today to talk about and unlock the secrets of halal wealth creation. Inshallah ta'ala, our goal is, has always been to educate you, to allow you to have as much information as you need to make an informed decision, grow your wealth in a halal way, contribute to the society, and inshallah ta'ala, give more than zakat, and more importantly, control our own narrative, as has been the case over the last year or so. Okay, so anything you see in this webinar is for general purposes only. It's not intended to provide you with personalized legal, tax, or investment advice. It is not intended to solicit purchase of securities. Assad Wealth Management, myself, are solely responsible for its content. If you have any questions regarding your own personal situation, please reach out to us. Let's have a conversation, and we'll be more than happy to help you out. As always, our time together is extremely limited, and we have a lot of ground to cover. So here's the game plan for today. We're going to take a few minutes to introduce you who we are, what we do in the company I work for. We're going to have Ibrahim Khan join us, inshallah. He's going to talk about IFG, Islamic Finance Guru. Who is it? Who are they? What do they do? What are they out to? And more importantly, what is their goals and aspirations in the future? Me and Sheikh Navaid are going to come back, and we're going to be asking Ibrahim some questions that we prepped ahead of time regarding retirement and investing and the Muslim community and a bunch of stuff like that. And then, of course, right towards the end of the conversation, we'll have a few minutes for you to ask your questions, either myself or Sheikh Navaid or Ibrahim himself. We're coming to you live on YouTube, so any questions, any issues, just restart, refresh, leave the comments in the chat here. That is where we will be grabbing your questions to ask our panel. So all the questions are there, but most of your issues, inshallah, should be resolved by just a simple refresh or restart of your browser. Recording is a question that gets asked quite often, so we'll try to make it available to you as soon as we're done here, inshallah ta'ala. That is the plan. So once we're done, you come back to the same website, which is asadwal.ca/ifg. You should be able to watch this recording going forward. My name is Hash Assad, or Hashmatullah Assad. I'm an executive financial consultant as well as a division director with IG Wealth Management. I've been in this role in this company, alhamdulillah, for over about 20 years now. I have certain designations. One of them is a CFP, Certified Financial Planner. That is the P&G of my industry for what I do. It's a worldwide recognized designations when it comes to comprehensive financial planning, which means advice not on just investments, but taxation, estate, retirement, education planning for your children, and making sure things done in the most tax efficient way possible by home the halal way. We are fully licensed in Canada only at this point. I know there's people here from around the world and we're watching it from around the world, but we're licensed in the province of Alberta, BC, Nova Scotia, Ontario, and of course, Saskatchewan. I don't do this on my own. There's actually a very client-centric, a very dedicated team of people behind me. We have Sultan Al-Kaki, which is a double major in finance, serving our clients in Northern Alberta and Ontario. We have Mustafa Azma, 8-year certified professional accountant, who serves our clients in Ontario as well as Southern Alberta. We have AJ Saran, my right-hand man, over 10 years of experience providing comprehensive financial planning. We have Sean Carafal, who worked with the bank for over 15 years, currently in charge of our IG Living Plan. We have Sheikh Navaid Aziz, who is our imam, our educator, our consultant, and our Sharia advisor to make sure that we invest your money in a halal way. Alhamdulillah, about 75 years of combined experience in this team. We're extremely proud of that. halal.asadwal.ca. Just a simple Google search for Assad Wealth Management. And if you're on LinkedIn, please connect with me. Love to have you part of my network. Ibrahim is quite active on LinkedIn as well, so Sheikh Navaid. I think Sheikh Navaid is more active on Instagram, so can follow Sheikh Navaid on Instagram, me on LinkedIn, Ibrahim on LinkedIn, inshallah ta'ala. All right, you're here. Subscribe to our YouTube channel. Perfect. All right. Without much further ado, I want to get to the meat and the potatoes. That's what we call it here in the western part of Canada. Is Mr. Ibrahim Khan himself. He's a co-founder of Islamic Finance Guru. If you don't know Islamic Finance Guru, a simple Google search about anything related to Islamic finance, these guys come up right away. Comprehensive set of videos, blog posts and stuff like that. They are the leading edge on making Islamic finance accessible to the world. He's also the CEO of Cur8 Capital. So we'll learn a little bit more about Cur8, what it is, how it works, and what they're up to. He's a graduate from Oxford University, published a book, alhamdulillah, Halal Investing for Beginners. If you haven't done so, please pick it up. I'm sure it's available on Amazon and all the different places. He is a specialist when it comes to Islamic finance and investments, of course, featured many times with Financial Times, Bloomberg, Reuters, and stuff like that. Please keep in mind, views of the speakers are not necessarily shared by IG Wealth Management, which is the company I work for. But without much further ado, I'm going to have Ibrahim come join us and take us through the next few slides. As-salamu Alaykum wa rahmatullahi wa barakatuh, Ibrahim.
Wa alaikum assalam wa rahmatullahi wa barakatuh.
Good to see you, bro.
Can you hear me okay?
I can hear you clearly. You have the stage, inshallah ta'ala. I'll control the slides behind the scenes, and you take on, inshallah.
Fantastic. Jazakallah khair, Hash. It's a pleasure to be here. Bismillah, alhamdulillah, wa salatu wa salam ala rasulillah, amma ba'd. So if we dive in and go to the first slide, I'm going to talk through over the next 20 minutes or so a bit of an overview around the basic principles of halal investing. I think before we start, the absolute critical thing that we need to make sure that we understand is, the question of why we're having this conversation in the first place. If I could ask us to flick to the next slide, that'd be great. So on the Day of Judgment, there'll be 5 things that would be asked about. And of those 5 things, 2 of those will be in relation to our money, how we earned it, and where we spent it. And if we think about the world as this matrix, in the first matrix, you had that moment when Neo suddenly could understand and see the matrix. If we understand the world and see it as a matrix, and we look around and we actually realize that the lubricant that connects human beings and societies and technology and physical assets and goods, the laptop or computer that you're on right now, or the device, all of those have an economic aspect to it as well. And so uh, when we are thinking about money and investments, we need to make sure that that aspect of it, which often is underlying, is hidden, right? It's like the electrics in our house, it's hidden away. That has to be still according to the will of Allah subhanahu wa ta'ala. And if it's not, then the entire thing gets really problematic. The second aspect to this is that I would encourage I would encourage us all to think about money not necessarily as your money. I would think about it as a trust that has been given to you, like everything else has been, like your body has been, by Allah subhanahu wa ta'ala, to do good with, to do what He wants on this earth with. And on the Day of Judgment in the Quran, uh, it talks about how on that day Allah subhanahu wa ta'ala will make the body speak. تكلم أيديهم وتشهد أرجلهم بما كانوا يكسبون. That the hands and the feet and the limbs and the tongue will testify about what it was used to do. And so that's an indication of how much this is effectively a resource. Our body and our money is a resource that's been given to us to shape the arc of history in the direction of Islam. And so investments should very much be seen as part of that, and our money affairs should very much be seen as part of that. And by that I mean not just that it needs to be halal, it's that actually it can be used to do good, just like we can use our bodies to do good. And then the final thing is, of course, it makes us wealthier as a community, and that comes with a huge deal of impact. And I kind of emphasize it in this kind of time when it's so stark that when you have economic power, that comes with significant political power as well, where we see billionaires who are trying to, I think, make Canada the 51st state. And you're seeing all of these kind of conversations going on. However, perhaps non-serious they may be, but it's a very strong indicator that money talks, and it comes with significant implications for us and our brothers and sisters across the world, not least in places like Palestine. If we continue further on to the next slide. So a brief background on IFG. So by way of background, I'm a corporate lawyer and did my ILM course as well. And IFG started off as a blog, as a labor of love, and today it's spawned into a full-on investment platform where we manage money for various people, and we'll talk a little bit about that. But the core mission is very much how do we help our community level up financially, get access to halal Sharia-compliant products that they can park their money into, that is a nice protective reserve for them, and can grow their money in a safe way. And the idea behind that is that we want our community to catch up effectively with the rest of the world. If the average net worth of the world is around $80,000, the average net worth of the Muslim, when we worked it out, was around $16,000. So we are off the boil and we need to catch up. And this is a key part of that. And the way we do that is through education and through investment. If we carry on. Yeah, so this is a book, Halal Investing for Beginners. We were very humbled to get people like Sheikh Yasir Qadi and Sheikh Haytham Al-Haddad and others give their endorsement, and you can get that on Amazon, and take advantage of that if you carry on. Yeah, so now we're going to dive into some of the nuts and bolts and cogs of how one actually goes about investing. And I'm sure people like the guys at Assad Wealth Management and Hash in particular will be very good at guiding folks through exactly these kind of things in a lot more detail. But this is a very simple way of approaching it, and the way I think about it is ask yourself three key questions. And the reason why we ask ourselves these three key cash questions is because it's in a way I want you to think about your wealth like a diet, where we all have these aspirations about losing weight in the abstract, just like we all have aspirations about becoming wealthy in the abstract. But then when it gets to the crunch, when we get to that Friday evening and we're hanging around with our mates, and our mate suggests, let's go out for a burger, and we say, oh yeah, that's a great idea, let's do it. And then off we go and we have a burger, and then we'll have a dessert afterwards. And before we know it, we've blown through, the calories that we really should be eating for that particular day, and we're probably not even tracking the calories. And you look fast forward, 3, 4, 5 years, and suddenly we've got some serious health issues. And the reason, if we scientifically and dispassionately assess why that happened, is because we didn't control the things that were going into our mouth and the way our relationship was with money and investment. Instead, we let environment and circumstance and ease dictate what was going to be the things that we were eating and our relationship with, the food. And and as a result, because we didn't necessarily have a goal about it, we ended up having, bad outcomes because we didn't necessarily have a plan about where we're going. The same thing is the case with money. If when people sometimes ask, is this a good investment? The thing is, you can't really answer that. You can't really say, is this a good drug? Well, yes, it is a good drug, uh, but not if you're for example, if you're taking additional testosterone, yeah, that's a good drug. If, for example, you've got some kind of, I don't know, illness that needs that, but probably not for women, you see? So when people ask, is this a good investment? It doesn't actually make sense unless you have a goal with which to compare it to. Then you can actually slot it in and fit it into exactly what's going on. The same is the case actually with the food, right? If I go back to that analogy, you can have the burger, right? Just like you can invest in some of the higher risk investments. But once you know you've got a plan and say, actually, okay, so I'm going to have the burger, and that means that I really shouldn't be eating very much for the rest of the day. And even when I have the burger, perhaps I don't have the chips or I don't go for the dessert. And then, it's part of your plan. So this is why this slide is so very important. So the key questions are, why am I investing? What is the amount of money I'm aiming to getting to, and what is my risk appetite? There's a bunch more questions that you can and should be delving into, but at a high level, these will help you start to kind of frame the conversation in your head when it comes to investments. If we carry on. So I'm going to give you a whistle-stop tour through the basic pillars or the basic fundamentals of investing. The first of those is to be consistent. The second of those is to diversify, and the third of those is to be long-term in how you're investing. If we flick on to the next slide. So the benefit of being consistent is, as you can see in this little graph, that you have this huge power of compounding, which isn't really clear to us until it really starts taking hold. And this is particularly relevant for people who perhaps haven't been investing for a number of years and are coming to this whole area for the first time and are now slightly worried that maybe I'm coming to this at the age of 40 or even 50 or 60, and I don't really have that much time to catch up very quickly. The good news is that actually, if you use compounding and you reinvest all of your profits, actually things can start moving in the right direction relatively quickly. It does, though, take about 5 to 10 years for those first rolls to happen. And for those of you wondering, what on earth is this compounding business all about? It really is as simple as the snowball going down a hill. So when I was actually on a hill a few years back, and we made a ball, and then we rolled it down the hill. And what you realize is that the ball at the start is just a snowball, but every time it turns, its surface area grows, and so the next turn it has, more snow can stick to the larger surface area it has. So it goes up at an exponential rate. And so the last turns of that snowball pick up a huge amount of snow very, very quickly. And that's why you've got this kind of exponential hockey stick style growth curve that you see. And so the punchline here basically is that uh, just the power of reinvesting your capital, investing in relatively boring stuff as well, but reinvesting that capital and holding that for a long period of time is probably one of the most important, if not the most important effect that you can see in your investment journey. The second aspect and a related aspect to this is in pretty much every country, I know Canada has these as well, where you've got these tax efficient wrappers that you can put around your portfolios. And if you are investing through those tax efficient wrappers, then that can be very, very significant. I can obviously speak for the UK scenario, and with our income fund, a GBP income fund, you can invest it through something called the Innovative Finance ISA. And I'm sure there's similar things in Canada as well and the USA. And if you are investing within that tax efficient wrapper, that 7.5% is effectively the same as something like 13.6% if it were to be taxed. That's the difference, because 13.6% is taxed, it ends up somewhere near 7.5% net. And so you actually have an outsize kind of return by compounding in a tax-free way in some kind of wrapper. So there's some real benefit to that. If we carry on. Yeah, so the second thing is, if you look at the two charts here, the first on the left is how we invest, and the chart on the right, or the pie chart on the right, is how the 1% invest. And this is from actual data that I believe came from Vanguard at some point or another, and I can personally attest to this. So I was a funds formation lawyer. I had the responsibility of forming funds and seeing how people like Larry Page and Sergey Brin, founders of Google, and the Bezos Family Office, Gates Foundation, and various others, how they were investing their money. And this is very much how they would be investing their money. And as you can see, what's going on here is the first and obvious thing is that there are many more investment categories that these ultra high net worths or these endowments or professional investors are putting their money. The second, less obvious implication of this is that their risk adjusted return is actually higher than the portfolio on the left. And what I mean by that is that every time you diversify your portfolio, you somewhat ameliorate or somewhat mitigate the risk. But what you're seeing on the right is that they actually have some medium to high risk investments in there. Things like real estate, private equity, which will include venture capital, hedge funds, and all of the others will most likely be relatively high risk things as well. But when you do that and you diversify and you have a balanced portfolio, your risk doesn't actually necessarily go up as much, especially if all of these categories are uncorrelated. So if we take a step back, why do we care about risk in the first place? We care about risk because we don't want our portfolio to be hit if there is a shock to that area. Now, the best way to mitigate against that is to invest in something that is completely different to that and uncorrelated to that. So if you are investing in real estate, then you should also invest in gold, for example, right? Completely uncorrelated to that. There's no recommendation to invest in either real estate or gold. I'm just kind of giving you an example of something that is completely uncorrelated. So if something hits the gold price for some reason, it shouldn't immediately mean that real estate is hit and vice versa. Now, what they've done is they've invested in multiple uncorrelated things. So that actually means that the risk of the portfolio as a whole goes down. But overall, because they're investing in things that give you a higher return, you end up on average making a higher average return for this portfolio than you do for the portfolio on the left. So punchline is basically diversify. It makes it less risky, and often it can actually increase the returns on average as well. If we carry on going further. And then this is the benefit of just investing long term. There are one of the key secrets of investing that beginners don't quite realize is the art and value of doing absolutely nothing. The art and value of making an investment, decent, sensible investment, and then basically just forgetting about it. Don't make the mistake of not making the investment, leaving in a bank account, and then forgetting about it, because that's what sometimes people end up doing, which is very naughty, naughty. Don't do that. But if you make a decent investment and you've got a portfolio set up, basically doing nothing can actually be a great way of growing the pot. And the reasons for this are twofold. The first is that every time that you enter and exit your position, you will almost always be incurring some kind of brokerage cost and some kind of transactional cost. And that really does add up over time if you are doing multiple entries and exits throughout the year and throughout the years. So the less that you do, the better. And the second aspect to this is that you're probably not a professional. Why try and time the market? Think about more time in the market, because as you can see from the graphs, long term, because of the way that our monetary system works, and it's very, our currencies get debased very quickly. We have a debt-based monetary system. It means that things that, real assets like companies typically go up in price because the value of the money is actually going down in price, in value, in real terms. And so just holding, your stocks, or just holding real assets like property or other kind of businesses is actually a great way of, just increasing your wealth over time. If we carry on going forward again. So there are basically arguably four main areas of investing your money. And I've kind of bunched together fixed income and property, but I think it's probably fair to actually split them out into separate bits. You've got stocks and shares, which is investing in the publicly listed funds and publicly listed individual stocks. People like Microsoft or Amazon or Google are all examples of stocks. And then you've got something called fixed income, which is giving you a fixed return. Now, in the mainstream conventional market, this is usually linked to some kind of interest-bearing debt. In the Islamic market, you can have, the private versions of this, and you can also have publicly listed versions of this as well, called Sukuk. And the fixed return that is coming is usually some variant of rental return, or some variant of it can be a few different things, but usually it's some kind of rental return at the heart of it. Or it can also be other contracts like mudaraba contracts and wakala mudaraba contracts, and also occasionally murabaha contracts as well. But the punchline is that there are Islamic versions that can give you a fixed return. And then you get into property. So property is pretty understandable, bricks and mortar. It will give you a capital appreciation, which you wouldn't necessarily always get from fixed income, but sometimes you can. So property gives you capital appreciation, so the actual value of your investment goes up, and it will give you some income as you go along as well. And then finally, you've got alternative assets. And within alternative assets, that's everything else. So this can, the primary things within the alternative bucket is called private equity, which is investing in businesses. And then if you're investing in early stage, more tech focused businesses, that's called venture capital. And then you can also have things like cryptocurrency and other types of alternative investments in there as well. So that gives you a rough sense of the 3 or 4 main categories of investments that we can be looking at if we carry on going forward. And here's just an example. It's not it's not investment advice, but here's an example of how someone's portfolio may look if they were looking to try and build a diversified portfolio. And so, you can see there's stocks, there's alternatives, there's fixed income and property. They've kind of gone heavy on the fixed income and property. Interestingly enough, we did a video recently on how all of the portfolios on Cur8 Capital are comprised, and you will see how our clients, who are some of the wealthiest people in the Muslim community, how they're investing, and you can basically get some tips of how they're constructing their portfolios as well. So you can check that out. There's a video that we did. I can't remember the exact name of it, but it's a relatively recent one. If we carry on going forward. Okay, so IFG is the education arm of our business, and then we've got Cur8 Capital. So Cur8 Capital is FC authorized in the UK to manage investments. So we manage just over 120 million now, across a whole range of different investment categories, and I'll talk about those in a second. One of the key questions that folks might have is, do we cater for US, Canadian, and overseas investors? So whilst we don't actively market in those countries, we do actually have, like, if you want to register and invest with us, we do actually have many US and Canadian clients, and also Middle Eastern clients. And the key point here, though, is that you need to be accredited investors. Or I think there's a similar category within Canada as well, of being an accredited investor, which basically means that you need to be slightly more affluent, or slightly more experienced about investing than someone who's just starting out. And the reason for that is just regulation, because the kind of investments that we're making are private markets investments, so basically not listed on the stock exchange. And so as a result of that, many countries will require a slightly higher bar when it comes to the regulatory sign up, basically. So if we continue to the next slide, as you can see, we've got an app and a website as well. So Cur8 Capital. I won't go through this in great detail, but we're a team now of 36 people, offices in London, Cape Town, and Dubai. And you can see that we've got quite a range of experience. Actually, this is a slightly older slide, but we've got a 8-man strong investment team, as well as a support function and our technology people as well, and who would be very happy to help you. If we carry on going further, the whole idea behind Cur8 Capital, and this is, I guess, thinking about what is it that we're trying to do, which is different. It comes back down to my start as a funds lawyer. I mean, I was seeing how these really ultra high net worth elite investors were investing, and what I never saw was practicing Muslims, being able to invest or accessing these kind of investments. And the kernel of thought was, well, why can't we? Is there a way that we can actually get to these institutional grade investments? And often the main barrier is having the minimum tickets to actually even access this stuff. And so this is where Cur8 came in, which was, okay, well, what about if we have a digital platform that's regulated and actually combines everyone's investments together, and we do the commercial and the Sharia due diligence as well on top of that, and then we can actually then offer our clients investments that they would just historically never have had at all, into their portfolios for the first time, from as little as £5,000, as a minimum investment, so $5,000 or the equivalent thereof. And so that was the kind of the kernel of it, and that's how the whole thing started. So the whole focus for us is, we want to give our investors a really diversified menu. And if you flick to the next slide, probably a good way to show this, we want to give them a diversified menu, but we also want to make sure that we aren't reinventing the wheel for the sake of reinventing the wheel. Wherever we can partner with others who are excellent in their space and also doing something that is Sharia compliant, then we will very much do that. So as you can see now, we've got multiple verticals. So when it goes to something as simple as cash management, putting your money into a savings account and making sure that you're getting decent rates for that, that's something we can facilitate, both for USD and GBP, not Canadian dollar at the moment. We are also able to have, we've got our fixed income fund, both GBP and USD, which gives a 7.5% return and 9.5% return respectively. Then on the real estate side, we work with, in our flagship fund is with Rasmallah, which is an investment fund from the Middle East, but they're managing a portfolio of assets in the UK, of basically blocks of flats that are used for long-term and short-term lets. And we also have another portfolio where we are investing in healthcare real estate assets, so GP clinics, pharmacies, dental practices, etc. So that's our real estate strategy. I won't go through all of the different partners, but we do also have some development opportunities as well that are a little bit more higher yielding, but also come with a slightly higher risk. On the private equity side, and this is, I think, a lot of this stuff, frankly, is pretty groundbreaking, particularly on the income fund side. We haven't really seen these kind of income funds available for the Muslim community ever, right? But on the private equity side, this is, you could argue that there's commensurate or the, equivalent things available, at least with income funds. But on the private equity side, there really is absolutely nothing. And so we really looked out for these because we wanted to just partner with someone who was doing it. And so we effectively started this from scratch, and uh, the the investment there is essentially investing in partnering up with a really experienced team of people who manage a chain of pharmacies, and we own that chain of pharmacies. We bought into them, and we're looking to grow into that chain of pharmacies in the northwest of the UK. So it's a very traditional business. Effectively, the main source of our revenues there is actually the NHS, the National Health Service. So you get that de-risked aspect to it, and you look to grow that. And the appeal of private equity is slightly lower risk than venture capital, but at the same time you can get into that kind of high teens return profile on a per annum basis. And then finally, we've got venture capital. So that's where we've got our in-house, probably oldest fund, which is our venture fund, which has made investments in nearly 100 companies now, with multiple exits, multiple duds, and multiple companies that are actually doing really well now as well, alhamdulillah, including actually at least one from Canada as well. So, and then the other thing that we do is we will invest in some other funds, particularly in the Middle East, but also in other parts of the world where we are just an investor, and let other people who are experts in their area, manage our money and invest in perhaps Middle East or in other parts of the world as well. And I think one of the investment we will want to make during the course of this year is, getting exposure to the US market in particular. If we flick forward. So yeah, this is an example of why we try and offer multiple options within our portfolios. The whole thinking there is that we want our investors to at least be able to diversify their portfolio, and create a balanced kind of return with a mixture of liquid and illiquid, a higher risk, medium risk, low risk, nicely mixed in. And of course, I would actually encourage them to have stocks as well. Which isn't something that we offer right now, but potentially we might do, and that would be an addition to this and add further diversification to the portfolio. I think that's pretty much it from my side. If I'm not wrong, I think that is the last slide. Yep, back over to you.
That is the last slide. Very well done. Alhamdulillah. We'll bring Sheikh Navaid back in here. As-salamu Alaykum wa rahmatullahi wa barakatuh, Sheikh.
Alaykum as-salam wa rahmatullahi wa barakatuh. Ibrahim, I liked you from before, but now I like you even more because we've spoken about money, we've spoken about the matrix, and you've given an analogy based on food. I think we're meant to be best friends, mashallah, tabarakallah.
The Halal matrix. The Halal
There
matrix.
we go. There we go.
I'm sure who is Neo. Ibrahim, jazakallah khairan for that. We really appreciate it. Me and Sheikh Navaid had an opportunity to think of some questions to ask you based on your extensive experience of working, and more importantly, actually working in a different part of the world. I mean, we have Islamic finance in Canada. Alhamdulillah, we're trying our best here to make it happen. I know you guys are slightly ahead of us in UK, and the term I always see is 20 years. UK is 20 years ahead of Canada when it comes to Islam. I wanted to ask you again. I think we've kind of covered this as well, but many times in our community, right? We're familiar with the prohibition of riba, the avoidance of interest and stuff like that. But we somewhat struggle with the practical applications of those. Alhamdulillah, you mentioned Cur8 Capital and all the amazing things they're doing behind the scenes. Are there any things that you've come across, 2 or 3 lesser known, but equally important considerations that Muslims should be looking at when it comes to making investment decisions? Even getting started is very, very tough. I see a lot of people just literally sitting in checking accounts with tremendous amount of money inside of it, not doing much with it.
Yeah, I mean, why don't we address the latter point first? The challenge about moving from no movement to actually getting off the fence, and really the start choice. People think that I've not got off the fence because I've not made an investment decision yet. I don't want. I just want to keep my money safe. But the reality is they've actually already made an investment choice. They've decided to allocate 100% of their wealth to cash, and they've invested it. They've put that money into a cash portfolio that isn't actually making them any money. In fact, I mean, the Royal Bank of Canada or all the other banks in Canada, I'm sure they're not. You can be sure that they're not doing this out of charity. They are a for-profit endeavor, and you can be sure that your money is making someone profit. It just isn't you. And so, moving and a very very stark way of seeing this is I was doing a portfolio analysis where if someone had 10,000, sorry, £50,000, and they looked to invest over a period of I think 10 to 15 years, and they did nothing on one side, versus someone else who had the same portfolio and just invested in a basic bunch of stocks, very average bunch of stocks. On one side, they would have gone up. The one that invested would have gone up by 4x, and so
Uh-huh.
they would have made that 50,000 something like 200,000. The other person, because of inflation, but also zakat, over time, will actually have gone down to 10,000. And so, inaction is just inexcusable. And then I think the other, coming back to the first bit of your question, what are the other few things that people can and should be thinking about? I think, people can should be thinking about the ESG aspect, ethical and social impact side of their investment,
Hmm.
because we're investing in a halal way to do everything we do in our life should be about doing good, and I think investments and money is no different to that.
Yeah, that's very well said. I think I always say indecision is a decision with the consequences, right? Um, and I often say that if you're not invested, you're losing, not necessarily one is obligation, which is 2.5%, but at least 2.5 to 3% to inflation. So at bare minimum, your money has to grow at 5 to 6% just to say that you have the same amount of money next year, right? And it's a very tough concept to get that to across to people. But I mean, good, bad, or different, what happened in the last 2 3 years now with inflation spiking up as much as it has, people realize what inflation is now. They physically felt inflation at 8% versus before it was 1 2%. I don't feel it, but at 8 you do. Okay, now I have to do something about it. Inshallah, this is important because education is at the end of the day is what we can do from your side and my side, and at least allow our ummah to know that these options exist.
Ibrahim, I have a follow-up question for you, man. So you mentioned ESG. Now, traditionally speaking, when we look at AOFI standards and other standards for Sharia criterion, we're usually just looking at qualitative and quantitative screening. Is the business halal? Is the service halal? And then we're looking at, financial ratios. Something that's not looked at in these standards is the BDS movement, the boycott, sanction, and divestment. Number one, do you think that's something that's important to look at moving forward? And then number two, if you do feel it is important, how do we, generate that conversation now? How do we start that conversation that Muslims should be looking at these sort of things as they're thinking about Sharia compliant investing?
Yeah, it's a great question. I think the simple answer is yes, we absolutely should be. I think most of us, there was a chicken shop down the road that they held out for a long period of time with their they had their Coke and their Pepsi, all of the other drinks on the boycott list. And I was pleased to note that about 9 to 12 months in, they've finally given way, and they had these non boycott drinks on the menu.
Oh, subhanallah.
So so I think boycotting definitely does work. I mean, Starbucks, they actually recently made, I don't know if you saw this,
I did,
$3
yeah, yeah.
million donation, which sounds very unlike Starbucks. Um, and and I think it's because it does have an impact. So I think we need to do that. I think there are actually um, uh, some from memory. I want to say companies like Kestrel possibly do have some kind of screen that allow for this sort of thing. But regardless, even if you don't you can't find an app that does it, you should be working with investment firms that have this aspect rooted in exactly what they do. And I'm sure certainly speak for Curate, this is something that we are very very conscious of. And then the second is that if you are investing yourself, you should look for the kind of standard screens out there, and you should then make your own decision in terms of whether or not you want to exclude or include. It's I would say though that it's not a straightforward area, because there are various different levels of how far one goes, because at one level, if you go to the absolute extreme, any country that is in any way kind of supporting or not politically aligned with our personal views on this subject, even by being in that country, technically you are paying tax. That's kind of a very extreme position, and so one has to be careful about where they land. And there's certain large companies that it's kind of that they may not necessarily be directly supporting what's happening in Israel Palestine right now, but then at the same time, it's it's very hard to actually boycott certain larger companies as well. So it's not a straightforward one, but we definitely should have it in the forefront of our minds.
Jazakallah khair. And I wholeheartedly agree. At the very least, make the intentionality and then see how far you can go with it. Bidnillahi ta'ala. Okay, I'm going to follow up with a second question for you now. You have just been appointed CEO of Ibrahim Khan Financial, and you have to create a one-stop ETF for all of the Muslims. Okay, so only one ETF. Talk to me about what are you putting inside of this ETF, and what are the different types of allocations that you would put in, inshallah.
Yeah, really interesting question. So am I just allowed to pick public stocks, or can I kind of mix
Yeah,
and match?
it has to be public. It has to be, everything's public. Yeah.
Okay. So I would have a long-term mindset, and I'm naturally quite aggressive.
I like it.
So what I would probably do is I would have about half of them in what's called the Magnificent Seven. So the seven largest tech companies, people like Amazon and Microsoft and Nvidia, I think are there now as well, Alphabet, Google, etc. The seven of those are the kind of, and those companies actually make up around, from memory, about 35% of the entire S&P 500,
Mhm.
and of the entire stock market globally, that then comprises about 17 or so percent. So, it's a very heavy allocation. So I would do that, and then for the other half, my thesis would be how can I identify the future Magnificent Seven? Because if you look at a cycle of 10, 20 years, these companies were not the top seven companies. And in the next cycle, the next top seven companies, I believe, many of those haven't actually, they're in the stock exchange, but they're not actually, there yet.
Mhm.
And so, if you had invested $1,000 in Apple in 1990, that would be worth $4 million today. And so it's kind of thinking, how can we identify Apple that many years ago? And so it's the thesis I would apply to the 50% is I would look for companies that have, and this is, by the way, I'll do a video on this properly as well at some point of the channel.
Inshallah.
It's the thesis developed with our head of our investment committee, a guy who was one of the most successful traders on the city for about 15 or 20 years. And who's now retired and managing his own wealth. And so this is kind of something we've been working on together. And the idea is that you basically have the ETF model that you normally have, tracker ETF approach, where they're kind of tracking each company, and as it becomes larger, they kind of increase the allocation to it. So what we do instead is go right to the IPO companies, the new IPO companies. You go get rid of the ones that have, you need to at least be in the market for about 5 years. Let's get rid of the ones that just IPO'd and then died, and then find out those where they have significant early stage investors that invest in IPOs, like Bailey Gifford and others like that. And then from that, you pick those that the graphs and all of the technical analysis is correct. Basically, without going into huge amounts of detail, you come up with a portfolio of about 30 to 40 stocks that we think of, they'll be the Magnificent Seven of the future. And then each year you revisit it and you just tidy that up, add some in, subtract some more, double down on those that are kind of increasing, and then you just do that for the next 20 years. And
Love it.
voila, you've actually got yourself your Magnificent Seven, and then you can adjust those out into the other side of the portfolio.
Jazakallah khair. That's wonderful
I can physically see the wheels are turning. Ibrahim's as you building his portfolio out. Let me tell you, one thing is not going to be in there is quantum computers stocks.
Yeah,
They're a
they
complete fail
crashed.
this week.
Absolutely crashed this week. So Ibrahim, let's follow up on this, man. Speak to me about cryptocurrency. Should Muslims be investing in that in your ETF? What are the cryptos you're looking at? And also on this, people are always looking to hedge against risk. Where do you stand on Sukuk? And what do you think our allocations on that should be?
Yeah, I think cryptocurrency is here to stay, and the very fact that you now have some of the largest fund managers globally who are taking positions in the space, and um, I think it gets to a point where if they're going to take a position and they need to then kind of build it up to 3, 4, 5%, that alone is going to be very significant, particularly for things like Bitcoin. So I'm pretty bullish on Bitcoin, and I suspect it's going to, especially with post-Trump, is going to rise quite significantly. I won't be very surprised if it goes past 200K in value as well over the next 24, well, at least 12 to 18 months. Beyond that, it's a bit of a it's a bit of a wild card in terms of what to go for. I would definitely go for some of the standard ones. Companies like Solana. I'm just going to pull up some of the stuff that I have been looking at: XRP, Solana, Ethereum, of course. You could look at BNB, ADA, and the usual kind of suspects. I think having a portfolio of those, decent larger ones will probably stand you in good stead. But I wouldn't expose it to any more than 5% of the portfolio.
That's fair. And your thoughts on Sukuk?
Sukuk. So I think that Sukuk are good. There's not enough of them, and they are very USD leaning. Within this particular ETF, I don't know if I would have any because it's very much growth focused. But I for certain types of investment strategies and certain types of objectives, I definitely would be interested in want to try and ideally buy them where they kind of go down in value, where the yields go up, and try and aim for that kind of 5, ideally 6 to 7 if we can get into that range. That would be ideal. So yeah, I'm kind of open to Sukuk. As someone who we run our income funds, I personally just feel that you can just do much better by not going for Sukuk. You can just get these 7.5%, 8%, 9% returns, property back, and they're semi-liquid, so 3 months notice. I just feel that, and it's not just us. There's other firms out there that offer some similar stuff like this. People like Nesta in the UK, and there's a few providers in the Middle East as well. I feel that that's, for me, just a more compelling option.
Oh, I agree with you 100%. You're looking to hedge against risk, you can still make profit at that time. You don't have to sacrifice profit for the sake of hedging against risk. So great observation.
I want to add just a couple of things to the Sukuk conversation. Yeah, Sheikh, I'm going to get you to just explain what Sukuk is in a second, but just for the people on the call here, Sukuk is a fixed income instrument, which is halal. This is where you become in a traditional scenario, what happens when you want to buy something, you go to the bank, you borrow money, you pay the interest, and then you use that money to what you need to do with it. In a situation where Sukuk or a fixed income, you become the lender. You're the one that's lending money out, and you're collecting, if you have fixed income instruments, interest, and in case of Sukuk, profits. But fixed income instruments or Sukuks have inverse relationship when it comes to interest rates. So when interest rates are going up, they are going down. But when interest rates go down, Sukuks go up. The value of the bond itself kind of goes the opposite. So it's reverse relationship when it comes to prevailing interest rates. Sheikh, you want to take it there's actually a question here about fixed income. You want to explain what Sukuk is? Ibrahim, you can as well quickly.
Yeah, so basically, Sukuk essentially sells an investor group a certificate and then uses the proceeds to purchase an asset that the investor group has direct partial ownership interest in. And then over a long period of time or over a determined period of time, the issuer must also make a contractual promise to buy back the bond at a future date at par value. So basically, it's like a bond, but you're doing gymnastics to get around it.
Last thing I'll mention with Sukuk as well is actually a new IOFI notification that came out, I think last week sometimes, where they're actually looking at all the Sukuks that have been issued and the structure of them. Actually, they have an issue with how they're structured. The underlying assets are not being properly managed, and they're not there. So the IOFI is looking at all the Sukuks around the world, and it's causing a bit of a trouble. Ibrahim, question for you, man. I want to talk about AI a little bit. So AI is coming. It's coming for all of us. Alhamdulillah, good way or in bad way. The world's taking advantage of it, and we are part of that. You already addressed the Bitcoin, the blockchain, and stuff like that. But I wanted to know your thoughts on Islamic finance, AI. Have you merged these two together by any chance? Have you thought about them and its impact on us going forward?
Yeah, so when we think about our mission at IFG about leveling up Muslims, the fastest way that one can do that is by jumping onto the next very inexorable tidal wave that moves things forward dramatically. And if you're in the right time at the right place, that can, significantly move your wealth forward very, very fast as well. And I would definitely say that AI is one of those trends. The genie is out of the bottle, and all of us are probably using AI now in some way, shape, or form. And this is very different to Bitcoin cryptocurrency, where you had the crypto bros selling us the dream, but I'm not actually sure that I think there's value to it, but it's not going to be so mass destructive as something like AI was, or going to the cloud was before that, or B2B SaaS before that, or mobile phones, the iPhone before that, or the internet indeed before that. And so I think AI is very much something that we should be focused on. In terms of the ways that one get exposure to this, I'd say that there's actually multiple types of themes to this. The first and obvious theme is investing in early stage venture, where this is kind of the internet era, the late 1990s, early noughties, which is going to give birth to some really interesting future, possibly magnificent sevens. And this is actually going really early, even before it gets to the public stock market. And so investing in early stage tech, and we're doing that obviously through our fund, and investing in AI tech startups is vital, and diversifying your exposure there. The second area is, I think, investing in things like the Magnificent Seven and the tech stocks generally, because that's kind of a nice way of getting some exposure to AI that's already up and running. And then the third area, I think it's less obvious, is things like real estate. So having a think about the growth in data centers, and the growth in the use of compute and electricity.
Power.
There's a whole host of different investment approaches that can be taken there around real estate and infrastructure that is actually going to be vital to deliver the level of compute that we need to see.
Alhamdulillah. Very well. But have you mixed the two together by chance when it comes to, the Islamic finance itself? Would that make our lives a little bit easier to analyze some of these investments, to review them faster? There's a lot of implications of AI itself, like you mentioned, but I just don't know if it will make it definitely overlaps into Islamic finance somehow, some way. I just don't know if there's any trends you see between the two of them, the Deen and then the AI. And then, of course, we've seen all those videos. Now I'm actually freaked out. Everything I see online, I don't know if it's real or not, or is it actually subbed, and is this the actual Sheikh Navaid talking or somebody else talking? Is this you or not? It's a different world now for sure.
We've had some AI impersonations of myself, not particularly good ones, but they are out there, and they'll be getting worse. I think AI is like any other technology, and it can be put to good uses and it can be put to bad uses. And so I think from an Islamic perspective, unless you're actively investing in something that is like AI gambling,
Mhm.
bot or something, uh, I don't think there's actually, too much of an issue with it. Where I think it is helpful for Islamic scholars to have a very close eye on it. I guess it's twofold. One is because it's just a new technology, and I think this is a systemic issue with Islamic scholarship at the moment, which is perennially underfunded,
Mhm.
and there isn't much interaction with swift interaction with future trends. So what ends up happening is we're just now getting to the point where scholars are coming out with fatwas against Bitcoin. It's like you kind of finally caught up to where everyone else was like 5 years ago, and
Yeah.
you've still you've kind of fundamentally kind of misunderstood what's going on and come down on the wrong side of the conversation to the point that it's kind of irrelevant. And I think that it's for Islamic scholarship, we also we need to have almost like a sandbox approach where with hygiene kind of and risk warnings, there should be almost like working fatawa, right, where it's like on the basis of this knowledge, this is kind of the judgment. So it kind of helps people move in a particular direction. So that's the first observation. And the second observation is that we are going to see the rise of AI muftis and fatwas. And I think that's it can be dangerous, but also it can be actually quite powerful because if you codify the huge bank of
Yeah.
Islamic literature out there, and you make that available at the fingertips of folks.
Yep.
um, I think that there is power to it, but it has to be used and it has to be designed in the right way. And I don't think you can ultimately get away with actually needing a human Islamic scholar. But anyway, these are my ruminations. Perhaps Sheikh Navaid, you might have as the actual scholar in the room, your own observation.
No,
Inshallah.
Jazakallah khair. I think they're astute observations, man. And, I agree with you. A lot more research and a lot more effort needs to be put in discussing these issues because I feel that as we get closer to the inevitable reality, we are going to be completely overwhelmed with the things that we're seeing. So may Allah help us and guide us. I mean, Ibrahim, before we move on to the audience and get questions from them, last question for you from our side is with regards to retirement reality. The vast majority of Muslims are not prepared for retirement. They have little to no pensions in their name. Now, given current market conditions, what is like one strategy or a specific type of investment that you think that Muslims can get into now that would help them feel a little bit more secure as they approach retirement?
Yeah. So um, what I would be focused on would depend on how far you are from your retirement. So I would think about a few questions. I would think about how far you are, how much you've already got in money, how much you will add to that in the coming years, and then based on that, and also crucially, how much do you actually need to retire on? So actually do the maths on that. Now, maybe the best way to think about this is by running through a live example. Um, so let's say you want to retire at the age of 65 and you're 50 now, and you've got £100,000 saved up, and you can probably add another £50,000. I'll use pounds, but you can use dollars instead, right? On top of that every single year. So over the next 15 years, you should be able to save up another 750,000 on top of the 100,000. So, just by cash alone, you should be roughly around 850. Um, and and let's say that you want to make an income of let's say 100K a year on retirement. So if we kind of think about the math on that, so 100K retirement income, let's assume that we want to earn 7%, per annum is I think relatively achievable um, uh, return. So if we kind of divide 100,000 by 7 and we times it by 100, that gives us about 1.4 million is the goal. So 850,000 is the cash that we basically have, and then we need to kind of increase this roughly by about 2x or 1.8x, which I think is actually pretty reasonable. So I think what I would be doing over this 15-year period is in the first 7 years be going about much more towards the growth end of the spectrum. And so I would probably have things like stocks, private equity, venture capital, property, and maybe a small rump of high yield fixed income in there. And then in the second half, this 8 years, 7.5, 8 years prior to retirement, I would slowly winnow away from things like the venture capital, maybe winnow down the private equity, winnow down the stocks, and gear up on the fixed income and real estate. So that by the time you get to 65, you're pretty much there where you've got about 1.5 million sat there, which is primarily in real estate and fixed income, which should be giving you about 7-ish%. Uh, and I think and then you might have a rump of it depending on how much you've got and what's going on into some growth as well, just to kind of keep the growth going for the next several years. Yeah, that's how I think about it.
So we started off on the same trajectory, but then you went drastically off. So I like the fact that you gave the example of someone that's 50 years old, someone that had 100,000 pounds saved up, but then all of a sudden from 50 to 65, he's saving 50,000 pounds every year. That's where I'm like, okay, we lost touch with reality for the vast majority of
No,
Muslims.
no. So this is the interesting thing, Sheikh. So actually, what happens at the age of 50 is that's when the kids move out, and that's when most people have paid off the mortgage. And so people feel really bad at the age of 50 where they're like, oh, I've only got like 100K, what am I going to do? But actually, what ends up happening is that last 15 years, your salary goes up as well, and all of these expenses have gone down. And so you actually do see quite an uptick.
Oh, I agree. But is it going to be 50,000 pounds worth if you've only
Right.
done 100,000 until 50? Allah knows best.
Yeah,
But I
maybe.
love the answer you gave. Jazakallah khair. Thank you so much. Okay, we're going to open up the floor.
Before we get to that, Sheikh,
Yes.
a couple more things. It's actually a great segue to what I had planned next.
Oh, Bismillah.
is the importance of financial planning. Listen, folks, one of the analogy I usually use to people when it comes to financial planning, Ibrahim, I don't know if you know Canada or not, but it's a very, very big country, very vast country. From one end to the other end, it's going to take you hours and days to travel. But let's assume you're in Vancouver, which is on the West Coast, and then you want to go to Toronto, which is on the East Coast. And you have this journey in mind. It's a big country, therefore you can't walk it, and you need to have a vehicle. The analogy I use here of the vehicle is of a financial plan. It's extremely important for you to know what kind of vehicle, what kind of engine, what kind of tires, what kind of windshield, how fast am I traveling, where am I making these different stops to make sure I'm able to go from one end of Canada to the other end of Canada, if that's your destination, which is, we're assuming it to be Toronto. A lot of the times what we do is we spend a lot of time on what kind of gas goes into this vehicle, which means is it private equity, is it halal investment, is it sukuk, is it crypto, whatever that might be. And alhamdulillah, those are very, very important conversations to have. I think a lot of the times where it gets missed is the actual vehicle itself. The question is, do I have a proper financial plan in place? Is this financial plan based on some math and AI and state-of-the-art software to answer some of these questions? So, for example, Sheikh, you said to go from 50 to 700. Is that even feasible? How much money am I making? How much should I be saving on an active basis? And do I have this written down somewhere? In Canada, Ibrahim, I don't know if you understand this or not, but basically, if a husband passes away, everything that he owns goes tax-free to the wife, and the wife passes away, everything that she owns goes to the husband tax-free, no problem, no questions asked. Upon the death of the last person, everything is deemed disposed a minute before the person dies and taxed at the highest marginal tax bracket before it goes to children. Right. So if you are somebody that has $700,000 and there's a lot of tax that are due on it, expect to lose 30 to 40 to 50% of your wealth to Revenue Canada before it goes to your children. So what we do a lot of the time that we spend with our clients, alhamdulillah, these are clients who have money, who have wealth. The question is not, do I have enough? The question is, how do I keep most of it? How do I pass that down to my next generation? So it's important to have a proper tax plan in place, but it's extremely important to have a will. Not a lot of us don't have a will, a power of attorney, a personal directive. Those are important documents as well. Cash flow is important. You talked about going from 50,000 to 700,000. How do I do that? How much money should I be saving each and every paycheck to get to my destination, whatever that might be? Maybe you want to go halfway through or not. Preparing for unexpected events, subhanAllah, heart attacks, stroke, cancer. I've had 2 clients who had cancer just in the last 2 weeks. and it's very, very chaotic. Alhamdulillah, they have money, so it's not an issue, but that throws a wrench in everything that we do. Buying your home the halal way, going for Hajj and Umrah and all those things. All this information, all these goals are important to have, which means that's the vehicle, and therefore you need to have a proper financial plan to address those questions and how do you get there. We call ours the IG Living Plan because the assumptions that we take in 2025 may not be accurate halfway through the year in 2026 or 2027, but at least it gives you a very, very strategic starting point. So takeaway for everybody today is to make sure that you do the proper investment planning, which is talking about the gas. What kind of gas am I going to put in this vehicle? But you actually have a vehicle. You have a roadmap to get from point A to point B and have that set up for you properly. So with that being said, I'm not going to waste too much time on this one here, but let's get to the questions from the audience. We are coming up to time as well. I know there's a lot of people here from around the world. I do get a lot of messages from UK for some reason. We're not there yet. Inshallah, one day. There's a question about collaborating between Cur8 Capital and Assad Wealth Management. Absolutely. Our tag is Deen plus Dunya. We want you to be successful in this world and hereafter, Bismillah ta'ala. So here's a game plan, guys. Okay. We have 15 minutes maximum for Q&A. Ibrahim, I don't know what time it is for you, man. Is it midnight?
No, 7:10.
Okay, no problem. Khalas. Man United, Man City's playing, so I think it's still not too late. So what I'm going to do for the people in the audience, if you can just take 2 minutes, we're going to take a 2-minute break here. I'm going to grab all the questions from the side. If you can just give us some feedback, it's extremely important for us to know how we did here. What did you love? What did you hate? I have no idea who you are, so any feedback you give me would be used and shared with the with our guests here, inshallah ta'ala. So just take scan the QR code, go to the website. Inshallah, I'll try to see if I can place it in the chat here as well. There's only 4 questions. If you can answer those for us, that'll be amazing, inshallah ta'ala. And then we're going to go into the questions, Ibrahim. We'll try to answer as many as we can, Sheikh Navaid as well, and get through it. But we'll give it maybe maximum 10 to 15 minutes max for questions. Does that work for you guys?
Yep.
Okay, alhamdulillah, sounds good, guys. Okay, so for everybody in the call, go to the website, scan the QR code, 4 questions. Let us know how we did, and we will really appreciate it. And then I'm gonna run some sort of timer somewhere. Uh-oh. Yeah, timer's running. We'll do that. Now I gotta find this.
Ibrahim, while Hash is working on this, let me pick your brain on some food. Favorite restaurant in London, favorite restaurant in Manchester.
Favorite restaurant in London. One. I've recently been going to Baraka, which is just off Liverpool Street. It's quite nice. It's a Turkish place. And there was there's an Afghan place. I can't remember the name of it though. On Romford Road. I think it's called Faber Pass. I think quite like that.
Okay. Nice. I like it.
And then in Manchester, I probably haven't developed a bit of a full kind of sense of the place yet, but I've heard very good things about Grubfellas. People were very, very excited about that. So I've not been, but I've heard very good.
I would love to hear a review when you go, inshallah. I've seen their Instagram posts, and mashallah, looks pretty good, man.
Really, you've seen Grubfellas? You've seen
Grubfellas, it's like burgers, wings, and that sort of thing, right? Yeah.
I don't know, but they were delighted when I said I'm moving near that place.
They probably need more endorsements and ambassadors. So Bismillah, that could be another source of income for IMG.
More investments. They need to grow that brand.
Yeah, I mean, to be fair, it wasn't actually those guys. It was their customers. Like one of the guys, he was like, look, he was like really happy for me that I was moving near this, august establishment. I was like, all right, fair enough.
Alhamdulillah. Hash, are we good to go?
Yeah, perfect. Let's go, inshallah. Okay, guys, let's talk about the questions and stuff like that. I'll try to definitely bring them up on the screen here. There are a lot of questions here, but let's see if I can answer this one here. You guys can pick. Sheikh, I'm going to move you up to the top there. I have seen many fatawas that say stocks that are less than 5% of a stock of prohibited product, then is halal to invest. How does that work? These businesses are all involved in riba. So they're talking about the 5% rule. Yeah. I think IOFI rule. Whoever wants to answer that question quickly, if you don't mind, I can as well if you want me to.
Ibrahim, you as our guest, would you like to take a stab at this?
Yeah, well, I mean, why not? So I think it's um, the basic punchline is that if you set a threshold that is too extreme, you're going to rule out all businesses because every business needs to have a bank account. And so the Islamic scholars, they want to set a threshold where it's so de minimis in terms of the overall profits that it is negligible in terms of the value that it puts forward towards the actual growth of the business. And I think it's essentially that what we are relying on is the ijtihad of the Islamic scholars and their collective judgment on this. And that's the number that they've put forward.
Jazakallah khair. And I think I'll chime in quickly over here. So what Ibrahim presented is the argument by necessity that Muslims should be growing their personal net worth so that they can support the causes of the ummah. And in order to increase their personal net worth, they have to be investing. But they won't have access to any investments if the threshold is not at 5% or higher than that. And number two, I also think we need to reframe the way we think fiqh. Fiqh is not black and white at all. The Prophet ﷺ, he talks about this concept of kullatan, which is a body of water that is so large that no matter how much impurity goes into it, it'll never impure the body of water, even if a person was to urinate in it, right? And that's how we need to understand fiqh, that there is a tolerance for the negligible. And this is what is happening. 5% would be considered very, very negligible, and thus they've allowed it to be permissible. And Allah knows best.
Ibrahim, this question has come up a few times. I know you mentioned you have some clients here in Canada who invested with Cur8 Capital. Are you coming to Canada?
Not anytime soon as a business. You guys are more than welcome to still invest with us, and as I've said, many people do. So I guess that's the punchline. I would love to visit Canada. I do have some family in Canada, and I know I need to visit you guys as well. So yeah, at some point I do need to, inshallah, make the trip over.
I think, bro, your family is like 5 blocks away from here.
Right. Okay. Fantastic.
Alhamdulillah. Okay, question for you here. I think you're trying to solve this problem, Ibrahim. Alhamdulillah, we have many options for Sharia investments. I feel where Muslims are lacking is wealth creation in the business ownership. Investing generally creates passive income, not wealth. I disagree with that, but I'll let you guys want to take a crack at that.
Yeah, if we think about where you create really serious wealth, it is through entrepreneurship. But only a minority, small minority of people will be entrepreneurs and are even interested in or good at being entrepreneurs. So it probably isn't for the majority of people. However, for those who are interested in it, who want to give it a go, I heavily encourage it, because the more we do have people in that field, the quicker that the collective pot will grow. If we have more Jeff Bezoses that are Muslim, ethical, or Elon Musk's even, that can significantly help our community and also God's cause on earth. With the other aspect, flip side of it, is that actually businesses running in a halal way, they need capital to actually grow. And if you have a dearth of debt capital, and you have a dearth of private equity capital and venture capital, then you're actually going to struggle to grow. And so this is where it's important for investors to make sure that they are investing in those kind of areas that actually allow for the growth of the collective pot.
Alhamdulillah, amazing. I couldn't agree with you more. If you're in a capacity to do a business 100%, nobody can pay you more than what you're worth. I highly encourage business ownership, but business is not for everybody. The rate of failure is probably close to 90%, but the 10% that make it will never look back. And once you do have that passive income from having that business, then investing and putting that money to use is extremely important. The number of businesses I run into just have money sitting in their corporate accounts and checks in cash is unacceptable. Money, you can actually have money inside your business, invested, growing over time, having it available to you as well is important, unless you're using it to expand further and and grow. This is actually a great dilemma, Sheikh. Maybe I'll get you to answer this as well. Somebody has the capacity potentially to pay off the conventional mortgage as fast as possible, versus taking those monies right now and investing it. I think it's time value of money. It's a great dilemma. It's also leveraging as well. Which one do I do? If I can borrow it to invest at 8 or 9, that's better financially, but I know there's an Islamic perspective to this as well.
For sure. So the first thing I would mention is making sure that your methodology is correct. Anytime you are about to take an action, make sure that you've sat with your local imam, your local sheikh, to make sure that whatever fatwa you're trying to apply is actually applicable in your situation. So making sure the methodology is correct. If you have done that, then in that sort of situation, you want to make a financial decision. Is the payoff in the stock market going to be greater than the amount of interest that you will be paying in your conventional mortgage? If it is, then financially it seems it is better to invest and pay off your mortgage over the long run. However, if the interest rates are so high that they cannot be offset by the amount of money that you're making through your investments, then it's better to pay off your mortgage quickly. And that is the way I would answer that question, and Allah knows best.
This question, we have answered this multiple times when it comes to zakats on investments. Inshallah ta'ala, we do have a webinar on our website that you can look at. It's asadwal.ca/zakat, where we address zakat calculations on all the different types of accounts that exist in Canada anyways, and the methodology of calculating your zakat properly. But we do have one coming up in Ramadan, inshallah, if you want to wait for that. We will have a more comprehensive version of zakat calculations and how you do that if you want to come in live. Ibrahim, As-salamu Alaykum wa barakatuh. What differentiates this from a typical riba-based investments that we have here at typical conventional banks in North America? I'm not quite sure what the question follow-up is too, but I'm assuming they're just asking how. This actually comes up for me as well. Some people ask like, well, my money is growing, is it riba? Like, I mean, it's not. You're creating wealth, is appreciating by capital gains or dividends, but it's not necessarily the same as interest. I think the confusion is growth is the confusing growth with interest, which is not.
So I was saying that I think, as you said, it depends on what investment it is, because it will depend on that in terms of what the answer is. But at the heart of it, you can actually create fixed returns in your investment portfolio that are completely Sharia compliant. And I think the easiest way conceptually to understand that as a Muslim is rental returns. So people sometimes think when you talk about fixed returns that that's somehow un-Islamic. And by the same token, people somehow think that Islamic finance means that it needs to be some kind of charitable endeavor, and there shouldn't be any fees, or the rates of return should be higher, or the fee should be lower. All of these kind of misconceptions. I mean, you're doing, it's like a halal restaurant, right? It's a business, but it happens to be run in a way that is is in line with Sharia.
I'm going to run through some of these questions very fast here, if you guys don't mind. Can Assad Wealth include options for investing Cur8 Capital? Inshallah ta'ala, one day we have to do this. Why not? At this point, it's not available yet, but we can work on that. Question for I invest in Cur8. Any possible applications for Canadians here? So number one, to invest into a private equity, you need to have two criteria. One of the two, which is you need to have a net income of $200,000 or more in the past 2 years, or your net worth needs to be over $1 million. So that's a qualification for it. In terms of taxation and stuff like that, you can have investments outside of Canada. That's not any issue whatsoever. Just know any capital gains or any income that you make is taxable back in Canada. So for example, if Cur8 Capital declares some sort of dividend and you receive that is taxable to you here in this country. They may be withholding taxes in the UK as well, potentially, but that is the tax aspect of it. Please consult an accountant to make sure that you do proper tax due diligence and go from there. Sheikh, this is for you. How are you using insurance as a tool in your financial planning?
I think that's for you, Hash. It's not for me. Yeah.
Okay, I'm not using insurance and financial planning. Khalas. I'm not convinced that the private equity is uncorrelated with public equity. Oh, this is a good one for you.
This is for Ibrahim, yeah.
This is for.
Yeah. So I don't necessarily make the claim that it is completely uncorrelated. I think the claim was that the more investments you have, the more lack of correlation you see. Interestingly enough, and the answer to this actually changes, from year to year. Interestingly enough, we did a video on this, maybe I'd say
I
a
saw that.
year and a half,
Yeah.
year and a half back, and I actually can't remember the answer to that, but I think it threw out basically that there are certain stocks, there are certain investments that are in a statistically significant way uncorrelated to each other, and so it's worth looking at. I mean, if you remember, Hash, what the investment was, then feel free to shout. What I would say is that I think private equity in particular, when you look at it relative to public equities, I would say that there would likely be some kind of correlation because it's ultimately the same asset class. What Where I think it becomes interesting to focus is around the IPO market, because that's the bridge between the two, and seeing how the IPO market is doing, and that will then have a knock-on effect on how we see private market valuations. So I think it's a fair question, it's a fair comment. Final observation I would make is that we actually recently, we're going to launch a video, I think, on tomorrow possibly, where we're going to go into one of the points that is made is how private markets valuations consistently are lower than public markets valuations. So if you think of it as a multiple of EBITDA, the public markets on average you're looking at about 17x EBITDA, and private markets you're looking at somewhere between the 10 to 15x EBITDA. And actually, if you go into micro private equity or micro PE, which is kind of where we play at the moment because we're relatively small, you're actually looking at EBITDA multiples of between 5 and 10. And so the upside that you can gain, and the cheapness of the asset that you get, is actually better. The kind of smaller and the kind of more private you get. The problem, of course, with that is it's kind of less and less liquid, and there's more and more idiosyncratic risk that comes with going further down. So yeah, it's a great question. Hopefully, some useful observation.
I think one thing as well, keep in mind for privates, the evaluations are not done every second. It's done only, quarterly basis, annual basis, and stuff like that. So the change in value is not as dramatic than it is for public equities. I'm not sure if you can answer this question or not, Ibrahim. Cur8 Capital's fees. If you want to avoid, it's fine as well. Inshallah, if it's public or not.
Yeah. It's it's public. The complication is it depends on what investment you go for, so it's not straightforward. But usually it's in the range of somewhere between 0.5 and 2%, depending on basically how involved the investment is. For example, venture and private equity is usually in the 2% range. Real estate and fixed income kind of goes into the 0.5 to 1%.
I can take crack at this, Sheikh. You can chime in as well. What would you suggest if someone in their 30s only has $1,000 a month to invest? What would you put that towards it, depending where you are, what part of the country, what part of the world you're in? If you're in Canada, US, highly recommendation to, number one, get a financial plan. I can't stress this out. The biggest friend you have right now is time. Time is your best friend. It becomes your worst enemy every day that goes by, especially in your 30s. Figure out what that you want and what the goal is or what destination you want to get to. Then allocate $1,000 accordingly to that, those different goals. So if it's retirement, if you want to buy a home, you want to go for Hajj Umrah, you want to buy a car, you want to send your children to school, those are all the important aspects of it. From that point going forward, in terms of investment vehicles, you can individual securities work, you can pick some of the halal ETFs. Ibrahim, I'm sure you know this or not, but we launched one of the only publicly available halal mutual fund in Canada after 20 years of hard work. That could work as well, but there's a lot of different investment vehicles that are available to you. Sheikh, you want to take a look at this?
No, I think your answer is great, man.
Perfect. Alhamdulillah. Okay. We are 1 minute in, so I think we answered most of the questions. And unless you see anything else, Sheikh, you want to take a look at it?
There's a question for you. It says one of the services in Assad Wealth Management is insurance planning. Can you please shed some light on that?
Yeah, absolutely, no problem. So we license for insurance, right? We understand what insurance is, how it works, the pros and cons of it. Legally, I'm a financial planner, so I have to give advice on what it is and how it works. We don't actually recommend it. It depends on client and stuff like that. And it's on our website because that's one of the services that we are good at what we do, but not necessarily fit for everybody that we talk to. So yes, it's on our website, it's everywhere. And I understand how it works.
Excellent. And then last question.
Yeah.
Is there an RESP that you recommend in Canada?
RESP itself is a type of investment account. So the RESP itself doesn't really make a difference. It just depends on what you want to do. So for example, if you're just starting off, brand new, you don't have much money in addition to just the RESP, the recommendation would be setting up what Munzel maybe potentially, or Wealth Simple, if you just want to get started with that. If you do have some wealth to your name and stuff like that, you can reach out to us. We can create for you, a retirement plan, an education plan for your children, and stuff like that. But the RESP contributions are $2,500 a year per child, and you get up to 20% in grants, which is $1,000 per year, approximately. $5, sorry.
Yeah.
It's $5 on. You can do $5. You can go back a year and catch up. But yeah, it's a simple account. Wealth Simple works. Munzel works. If you're just getting started.
Jazakallah khair. I think we're good over there.
Okay. From my side, Jazakallah khairan to both of you. Ibrahim, appreciate your time. I know it's a little bit late for you. It's been absolutely amazing to getting to know you a little bit more and some of the things that you've been up to. And I watch your videos, everyone that comes out. So I think some of the videos even I know more than you do. Alhamdulillah. Sheikh, Jazakallah khairan to you as well on Saturday morning, afternoon here for you. What I usually do, say thank you from my side. Ibrahim, if you want to say salams, and then we'll get our Sheikh to take us out with a beautiful dua.
Inshallah.
So it's been a pleasure. Jazakallah khair, both of you, for organizing. Looking forward to coming to Canada and meeting you guys in person.
Inshallah ta'ala, inshallah.
Jazakallah khair for your time, Ibrahim. Great conversation, wonderful insights. May Allah subhanahu wa ta'ala bless you and increase you in goodness. May Allah subhanahu wa ta'ala bless Cur8 Capital and allow it to continue to serve the ummah for its financial needs. Allahumma ameen. طيب folks, let's conclude with a dua. اللهم لك الحمد كله ولك الشكر كله وإليك يرجع الأمر كله علانيته وسره فأهل أنت أن تحمد وأهل أنت أن تعبد وأنت على كل شيء قدير. اللهم صل وسلم وبارك وعنم على نبينا محمد وعلى آله وصحبه وسلم. Oh Allah, we ask you by your beautiful names and your lofty attributes that you forgive us for our sins and shortcomings. Oh Allah, make our wealth a proof for us and not a proof against us. Oh Allah, suffice us with the halal and protect us from the haram. Oh Allah, guide us to that which is best for our dunya and our akhirah and save us from the punishment of the hellfire. Oh Allah, bless our rizq for us, make spacious for us our homes, and oh Allah, allow our families to be taken care of after we pass away. Oh Allah, allow us to contribute to the cause of the ummah. Oh Allah, uplift the suffering and the ailments of the ummah. Oh Allah, guide this ummah to that which is beloved to you. Guide us to the book of Allah. Guide us to the sunnah of the Prophet sallallahu alaihi wasallam, and keep us steadfast on them till we meet you, Ya Allah. Subhanakallahumma bihamdik, ashhadu an la ilaha illa ant, astaghfiruka wa atubu ilayk. Jazakumullah khairan to everyone once again for joining us. Wassalamu alaikum wa rahmatullahi wa barakatuh.